Welcome to the Wisdom Whale podcast, where we dive deep into the vast ocean of money, wealth, and financial literacy. Join us as we embark on a journey of exploration, uncovering the secrets and wisdom that will help guide you towards financial success. In today's episode, we'll cover liabilities, which include debts owed to others, such as loans, owed amounts, expenses, deferred revenue, long-term debt, and contingent liabilities. Liabilities, my friends, are a fancy term for debts or obligations that someone or something owes to others. Yep, it's all about what creditors can claim from the assets of an individual, company, or organization. Like, imagine you borrowed money from a bank or took out a business loan from a financial institution. Those amounts you owe fall under the category of loans and borrowings. Even if you borrowed some cash from your buddy Dave, that counts too. Another type of liability is accounts payable. Basically, it's the amount of money you owe to suppliers, vendors, or other creditors for stuff you bought on credit. You know, when you go to the grocery store and they kindly trust you to pay later? That's an accounts payable situation right there. Now let's talk about accrued expenses. These are expenses that you've already incurred but haven't paid yet. So, things like salaries and wages for your hardworking employees, rent for your cool office space, utility bills to keep the lights on, and yes, even taxes, my friends. These are all examples of accrued expenses that need to be settled eventually. Oh, and how about deferred revenue? This one's interesting. It's when you receive payments in advance for goods or services that you haven't delivered or performed yet. So let's say you run a photography business and someone pays you upfront for a fancy photo shoot next month. Until you actually snap those fabulous shots, that money counts as deferred revenue. Moving on, we've got long-term debt. These are the big league obligations that have repayment terms stretching beyond 1 year. Think bonds or long-term loans here. You can't just pay these off in a couple of months. It takes some serious commitment and time. Now, there's a sneaky type of liability called contingent liabilities. These are the potential obligations that haven't materialized yet. So, for example, you might have some pending legal claims against your company, or maybe a sticky situation with warranties on your products. Until these things actually happen, they're hanging over your head as contingent liabilities. Remember, liabilities don't exist in isolation. They go hand in hand with assets. When you look at a balance sheet, it's all about finding the sweet spot between assets and liabilities. The difference between the two is what we call shareholders' equity or owner's equity. It basically represents the leftover interest in a company's assets after you deduct all the liabilities. It's like a company's net worth, my friends. So there you have it. Liabilities are the debts and obligations that hang over our heads, reminding us of the things we owe. Whether it's loans, accounts payable, accrued expenses, deferred revenue, long-term debt, or those tricky contingent liabilities, they all come together to give us a real understanding of where we stand financially. So let's keep an eye on those liabilities, my friends, and make sure we're managing them wisely. In today's episode, we explored the concept of liabilities and how they relate to assets, including various examples such as loans, expenses, and long-term debt. Thanks for listening. See you next time, and don't forget to subscribe.